Very good. You've made some money and now you want to buy some stocks and you want to buy some investments. You want to do some options trading and you want to use an LLC and you don't want to pay US taxes in here or in your home country anywhere. I don't know what you're doing in your home country, but in this video today, I'm going to explain exactly how to do it. What kind of company to open, what kind of brokerages you should apply to, estate tax issues, withholding tax issues. I'm going to tell you everything you need to know when you are a non-resident buying and selling stocks in the US. You want to be a trader. That's amazing. And I want to help you get there. I want to help you be so successful. And I know there's a lot of bad information. There's a lot of information for Americans, for other people that doesn't apply to you. This is for you, my friend in Mexico City, my friend in Sweden. And you want a brokerage account. And you want to buy and sell stocks and make money with your money. You want to invest your money and not just have your dollar devalue. This video is going to help you figure that out. And I'm in the trenches. People literally pay me to help them do this for them. And people pay me to open these accounts and set up these structures. And I'm going to tell you all you need to know so that you can set up the right structure for you on whatever budget you have and also not pay any taxes in the US if you do it the right way. So I think you're in the right place. Stay here. Stay to the end. I have nuggets the whole time. I talk fast. Watch it again if you have to and share it with your friends. So the first thing that I want to talk about when you're using an LLC versus using an LLC versus doing it in your own name or versus using a multi-member LLC, like how should you do it? It's easier to open a brokerage account in your own name. You say, hey, my name is Fred, I'm Australian, and I want a US brokerage account. I think they'll put you in an Australian account. It depends what exchange you use. There's so many of these, and it's generally a little easier as a person, but I'm going to tell you the big downfall with doing it that way. The problem is that if you're a regular person, you open an account. If you have more than $60,000 in your account and you die, then any stock that you own is subject to estate taxes. Your family can't get it until you show the brokerage that you paid your estate taxes. I did 2 last week. You know, old ladies whose husband passed away. It's tragic. It's a sad call because they lost someone and now they're paying estate taxes. And even if they have no taxes because there's a treaty, they have to wait 6 to 12 months to get the money back, to get the document we need to get the money back, because the IRS is slow and the forms are very unique and they have to pay me to do it. So instead of paying me and then waiting, just pay me and we'll set it up right the first time. So if you're just like getting started and you have $5,000, like sure, open a personal account, play around and do it. But if you have some money and you're like taking this seriously, let's consider option 2 and 3 and 4. Option 2 is going to be a single member LLC where you're the owner, and that's like kind of the same tax-wise as if you do it in your own name, except now you have a little bit of legal liability protection. If you are driving around in Australia and you run over someone, their family sues you, then you would be protected. Your assets are in this LLC as long as you set it up the right way, you have the right legal documents in place, everything's been signed, you've done it the right way, they can't get those assets, and those are safe in your LLC. Again, I don't know how the laws work in different countries, but that's the concept. If you have it in your own name, sure, that's free game. That's why we would use an LLC, a limited liability protection. So the multi-member LLC, that's when you have 2 owners, is a fun little way to do it. I would recommend this for any low-budget person, anyone who's doing it themselves or anyone who doesn't want to go with the final option because there's a little bit more restrictions. But the multi-member LLC is like me and my wife are 50-50 owners. Maybe I put my kids on there with 2%. And that way, if anything happens to me, they can still have access to the account and they can still get in there, move the funds around and take it out before having to pay any estate taxes on this. And the estate tax is up to 40%, and this is on your assets over $60,000. It's tragic. If you have $160,000 of stock, Apple stock, and you die, and the brokerage says, we're not giving this to you until you pay your estate taxes, which is like standard procedure. These brokerages are the worst. All of them. They're all like this. It's standard procedure. Then you're going to be paying $40,000 in estate taxes to get that $160,000 back. And you're also paying me to do it for you, so you pay as little as possible. And it's the worst. That's why we don't use a single member LLC. A multi-member LLC is a little bit more nuanced. Technically, it is a U.S. person. And technically, it hasn't been challenged in the IRS and the court cases, but it really comes down to how you apply for the brokerage account and how they set you up. It's possible that if you're a U.S. person, you can still access the funds without paying estate taxes if it's a multi-member LLC, but it's a gray area. It's not the best choice. It is better than a single member LLC. That's just the estate tax part, right? Also, there shouldn't be withholding on dividends when you use a multi-member LLC because technically you're a U.S. person. And they will give you, at the end of the year, a 1099 form showing how much dividends you had, and then your partnership tax return, on your tax return, you would have to pay the dividend tax withholding for the foreign partners. It's kind of annoying from a compliance standpoint. That's what I do professionally. Like these are really tedious filings, and they're really detailed. They can be done, of course, but it's like kind of annoying to do it the right way. My kind of recommendation here is don't invest in dividend stocks. If you're a dividend investor, we can deal with it. But like if you're just like a passive guy and you're like, oh, I heard this was cool, like dividend stocks are annoying. You're going to be paying 30% withholding unless there's a treaty. So if you're a guy who lives in Argentina, no treaty, if you get 10,000 in dividends, you're only getting 7,000. They're taking 3,000 of taxes off the top. Or you have to file a bunch of forms and then pay the 3,000 yourself, and it gets a little complicated. So the multi-member LLC is better than the single-member LLC. It's not perfect, but it's better. And then the last option, the most secure option, is what I've done for a lot of clients. We have a Panama corporation or some kind of a Costa Rica corp I've done before, some kind of foreign corporation that is 99 or 99% owner of an LLC that you, the investor, owns the other 1 or 2% of, so that you can be the manager of it and you can have that percentage as well. That gives you the best legal protection from a multi-member LLC, has the best legal protection. Again, you have to make sure your legal documents are actually correct. The template ones on the websites aren't very good. You have to make, that'll give you the best legal protection, and a foreign corporation can never die. There won't be estate taxes on any investments from a foreign corporation. Same rules apply regarding the dividends. They're still annoying, but you can do the dividend investing and opt for them to withhold. It might be easier. But that's what I want to talk about now. I want to shift into the dividend withholding a little bit more. If you're a single person or a single member LLC, they will just withhold the dividends, and you can give them a W-8 BEN or BENE if it's a foreign company that owns the LLC 100%, and put the treaty rate on there if you are from France or Germany or whatever, Australia, and there's a U.S. tax treaty. You can do that and they'll withhold less taxes on the dividends. They'll withhold the 15% or the 10% depending on what applies. And that way you don't have to file any real personal tax returns and you're kind of done. You have to file your 5472s, whatever, but you're kind of done there. But if you have the multi-member LLC or the foreign-owned multi-member LLC, maybe you want to use the Panama Corp with a LLC, a direct owner, then you don't have to deal with the dividend withholding stuff. It's not as secure, but it's still pretty secure. Like I've never had an issue with that. You know, that's when you have to pay the tax on that. Again, if you invest in mutual funds that don't issue dividends, that's probably better. There's ETFs, there's mutual funds, there's individual stocks that don't actually pay dividends. You can buy and sell before the dividend date and not really lose, and to get advantage of the dividends without, in terms of the price swings, without really losing any kind of value there. So that takes a little bit of planning and foresight, but you know, the 30% taxes is sucks. And in reality, there's no capital gains tax. I can't believe I haven't mentioned this yet, but regarding the income taxes, whether you are any of the setups, the 4 setups, person, single member, multi-member, foreign corp structure, whatever structure you're using, there's no income taxes. So that means that you're not paying income taxes on the capital gains, only on the dividends, not on the portfolio interest either, only on the dividends. So you can buy and sell options, make $100 million in options and pay no taxes in the US. And maybe using a foreign structure is better for your home country. That's where having the conversation makes a lot of sense. Last thing I want to talk about, super important, is actually opening these exchanges. It's become very annoying and very difficult and complicated. We have it in our firm, we break it down into 3 options. If you have less than $100,000 to invest, you generally have Interactive Brokers, and you generally need some kind of U.S. address, a friend or a family member that we can get a proof of address for. We need some kind of U.S. address. They've been not that easy at opening accounts for single or multi-member LLCs. The multi-member is a little easier. For example, if you're a Bolivian guy and you want to open it in your own name, they're going to open you the Bolivian version of Interactive Brokers. It's not going to have as good of prices. It's not going to have all the tools available. It's not going to have all the stocks and all the options available. The US version has the most tools and the most stuff available. But the application is annoying. You have to send a ton of documents. The clients that pay us to help them with this, generally we have to create tons of documents. And one of the main requirements is having an address in the US, like a real physical business address. We can't use our office because once you use an address, it's kind of burned from Interactive Brokers. So we used our address for one client and myself, maybe, whatever, a couple people. And now my address doesn't work. It's considered a registered agent in Interactive Brokers. So you need like a unique address, a family member, a cousin. We need to figure out how to buy one that no one's used. And it's tedious. They generally don't close accounts. So once you get it open, it's fine. It's just getting it open is tough. Generally, we recommend like a $5,000 or $10,000 deposit when opening, if possible, so they can actually process the application. They won't if you don't actually fund the account. So that's option 1. Option 2 is much more sure thing. If you have $100,000 or more to invest, We have a firm we partner with, a management firm, like they basically are licensed to manage funds for you. You can still do all the trading. However, they take a 1% commission because they manage the money. They give you advice. They're investment advisors. They use the Charles Schwab platform. But if you have 100,000, you want to invest in the U.S., paying 1% on that to use the managed funds and have someone maybe helping you a little bit, it's not a bad idea. I personally have an investment advisor that I pay a 0.2 or whatever. I don't have any money. I mean, I have like whatever. I'm an entrepreneur. I'm out here grinding, making videos. But if you have 100 grand, I would recommend that option. It's a great option. Charles Schwab just bought TD Ameritrade, well, whatever, like 2 years ago. They bought the Thinkorswim platform. Charles Schwab is the biggest interactive brokers, is probably the biggest digital one, but Charles Schwab is huge. And that's option two. You know, they want you to open the account. They make money on it, so they're going to help push those accounts through, whether no matter what the ownership is, whether you use option 1, 2, 3, or 4. Obviously, if we're doing this, we're going to use option 2 or option 3 or 4. They can help manage in the case of an untimely death or whatever, because we don't want to pay estate taxes. And then the last one, another good option is Charles Schwab directly. You can open a Charles Schwab account, but for foreign-owned stuff, whether you're a foreign corporation, foreign trusts, multi-member foreign-owned entities, the bottom threshold is $250,000 investing into the account. I don't know if you have to keep it there. I know you have to put it there. I think you're supposed to keep it there. I know it sounds like a lot. For some people, it's a lot. For me, it's a lot. For some people, it's not a lot. And it's a good exchange. It's a good brokerage. It's huge. And it's they have the FDIC insurance. They have all this stuff. And it works fine. The one thing is it's a lot of money. But what's great is that you can do it yourself. You can get it open. They have pretty good support. And it's an option that works. You know, it works. It has a minimum. The problem is like Merrill Lynch, Goldman Sachs, these other ones have $1 or $2 million minimums. They have huge minimum investments for taking on foreign clients. So if you want to open a U.S. brokerage, get access to the best U.S. securities, like this is how you do it. You have the single member LLC, the multi-member LLC, you have the foreign corp owned LLC, and that way you can get into the U.S. brokerages, pay no taxes on capital gains. I explained a lot about the dividends, kind of explained about how you can open the accounts and how it's complicated. So I think I explained a little bit. I hope this is helpful. I have other videos. You can see one up here. You can click about why the LLC doesn't pay taxes. But this is going to be another good video just like this that's going to help you use LLCs to make money. These are just tools for you, the non-resident, to transact financially and to invest in the markets. And I'm here to help you make sure that you're not paying taxes, you're not exposed to estate taxes, you do it the right way, you protect your assets, and that you're in just a great position to be successful. Okay, so if you want to talk with me and my team, there's links below. Click this video, like, subscribe. I appreciate you. Have a great day, and I'll see you on the next one. Hope this was helpful. Comment below if I missed something.